Hi, I'm Bobo. In this week's recap, the government slowed its launch of land sales amid a depressed market. For its third fiscal quarter, the government auctioned only one residential plot involving about 110 units, down 90% from last quarter for its land sale program, with no commercial sites put up for sale. This is the lowest quarterly number in the program's history. Located in Changsha on Lantau Island, this is a small residential site valued at around 200 million Hong Kong dollars to $700 million. Other projects came mainly from the Phase 1 development of the MTR's Tung Chung East Station, involving about 1,200 units. The Urban Renewal Authority also has two projects located in Kowloon City and Ma Tau Wai, respectively, involving about 1,450 units. Together with 7 private redevelopment projects, a total of roughly 3,200 units will be offered. Secretary for Development Bernadette Lin said private housing land supply for this fiscal year would reach about 10,150 units, including the first 2 quarters, which is close to 80% of the full-year target of 12,900 units. But if we look at the revenue from land sales, it seems that some progress has yet to be made, as about 10 billion Hong Kong dollars have been generated from this year's land sales so far, which is only 10% of the target $85 billion. Additionally, Financial Secretary Paul Chan Mo-po admitted that this year's financial deficit would be bigger than expected. Regarding calls for the removal of property cooling measures, he said the government would adopt a pragmatic approach by actively monitoring the market. Meanwhile, developers prepared for the launch of a large-scale new development, Yoho West in Shui Wai. The project is located above the Tin Wing MTR light rail station. Developed in 2 phases, the projects will offer 1,976 units with an expected completion date of September 2024. The project's Phase 1 development received pre-sale consent last month for 1,393 units, with sales expected to commence this month. Next, the luxury housing market recorded the largest number of rental transactions this year. Rental prices, however, are falling. Nonetheless, the luxury market continued to record some high-end rents. Owned by Wharf Holdings, an ultra-luxury residence at number 11 Plantation Road on the Peak, measuring about 10,800 square feet, was leased for a whopping 1.1 million Hong Kong dollars a month, a rare high-end transaction for the luxury segment. This monthly rental is 18% lower than that of a home which was leased in March last year for 1.35 million Hong Kong dollars a month. Turning to the first-hand market, show flats for many new projects were closed due to Typhoon Koinu. Only 13 first-hand transactions were recorded over the past weekend, similar to last weekend. These transactions came from new developments such as the Vertex in Cheung Wan, which recorded 2 deals. One of the transactions included that of a 2-bedroom unit, which sold for over 14.9 million Hong Kong dollars. Meanwhile, a 3-bedroom unit at Shatin in Kowloon Tong sold for 17 million Hong Kong dollars. Turning to the second-hand market, although the Typhoon Signal number 8 was hoisted on Sunday, buyers continued to look ahead to the policy address to be released at the end of this month, with hopes of seeing cooling measures reduced. But that didn't stop some buyers from snapping up homes, which drove a rebound in transaction volume. Over the weekend, Hong Kong's 4 biggest real estate agencies all saw a week-on-week rise in trading volume, with 5 to 9 transactions recorded for the city's top 10 blue-chip housing estates. Midland Realty recorded 9 transactions, up 50% week-on-week. Despite an increase in weekend transactions, however, it's worth noting that trading volume has hovered in the single digits for more than 7 consecutive months. So let's check out 3 deals made over the weekend. Kingswood Villas in Shui Wai recorded 2 consecutive transactions. Its first case was that of a 3-bedroom flat in Maywood Court, which measured 540 square feet in size and sold for 5.13 million Hong Kong dollars at 9,500 Hong Kong dollars per square foot. The original owner bought it for $5.04 million in 2017 and made a small profit of 90,000 Hong Kong dollars. It's estimated that they'll leave the market at a loss after expenses. Our second case comes from Kingswood Court. This was a 3-bedroom flat measuring 546 square feet, which sold for 4.55 million Hong Kong dollars at around 8,333 Hong Kong dollars per square foot. The original owner bought it in 1995 for 1.32 million Hong Kong dollars, booking a profit of 3.23 million dollars, which indicates a 2.4-time rise in appreciation. Meanwhile, an investor at City One Shatin bought a 2-bedroom flat to rent out. The 284 square foot flat was sold for nearly 3.8 million Hong Kong dollars at 13,309 Hong Kong dollars per square foot. The original owner bought it in 2016 for 3.33 million Hong Kong dollars, making a profit of 450,000 Hong Kong dollars. Looking at future interest rate trends, keep an eye out for the US Consumer Price Index to be released on Thursday. It's expected that if the CPI picks up, the US Federal Reserve will raise rates yet again. That's all for this episode. See you in the next.